Good evening, snipers. I hope you all are having an amazing weekend. I will be in Philadelphia on Monday night. So Tuesday, Wednesday, Thursday, I will be completely on audio, and we will be live trading on our Discord as well. Apart from that, I did get some recommendations from Drew, and I will be posting out the cafe that I'll be at. If you do want to, if you are in the area and if you want to come trade live with me, I'll be there as well. But otherwise, like market can get better this week. We'll have to figure it out as to where the bottom is, which comes tomorrow or day after. Most probably day. I'm thinking it will be tomorrow, but we'll have to see that a risk reversal kind of trade, and then Tuesday kind of gapping up. We have CPI, PPI in the mix, so it will be very, 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 very interesting. I don't have many charts to talk about, but I'll talk about a few trend lines that I'm looking for to trade when that happens, and you still have to size down, try to figure it out. With lesser trades, when things are working out in our favor on a day-to-day basis, we are trading a little bit more, but otherwise we are just sitting on hands and waiting it out, right? Take those 40-50% gains. It's totally fine. Size down your positions. Try to, play defensive right now. Like, the market is extremely volatile, which is great, but at the same time it comes with the risk of you trying to, figuring out something, and then ultimately something reversing very, very fast, and you not being fast enough to get out of those positions per se. So be very careful with respect to that. If you're playing both sides, it's totally fine. I think this is the type of market where you'll have four losses for every win that you'll have, and your one win should either cover for those four losses. But if you trade like me, you either should have three wins in every five trades that you take. So that is essentially where you want to go with. And I'm there, right? Like, I'm still hitting those 3 to 5. The win rate is around 70 plus. The week prior to last week was 66, which is pretty low. That is why it was mostly a flat break even kind of week, and last week we kind of did really well, especially with some of these trades that we took, and how fluid kind of traded with those flow as well. Flow is working, charts are not working, so keep that in mind. And that is why I'm kind of giving a more precedence as to what fluid is doing than what I generally try to trade. Like, even on Friday, if you remember, I took CrowdStrike trade. I knew it was a loss. I got out of the loss. If you go look back at the alert, when I picked up the loss, I was like, if fluid picks up something, I'm going to pick up something, and I picked up PLTR, I believe, and which got me back in the green, and I stopped trading, which is great. I mean, that is how you want to trade, and that is how you want to be. But anyway, I will be live trading most of this week. I'll be on voice Tuesday, Wednesday, and Thursday. We'll go from there. But again, still a size down kind of week. Monday or Tuesday, we'll have to figure out where we want to pick up the bottom. Right now, Google seems to be a little bit more stronger than rest of the market, rest of the mega caps. So that's why it's the trade idea for the week. But I'll also go over that as well in detail. But otherwise, let's quickly get into what I'm seeing for the week with respect to seasonality, the earnings calendar, macro calendar, and then we'll talk about SPY, QQQ, and IWM, the levels that I'm looking out for on them. And after that, core list of companies. I won't discuss much there. I'll probably go after 3 to 5 stocks, because I'll be live and I'll be talking about more stocks as things go by, because the main reason is most of the stocks are broken down. You have to have the patience to, wait to get into trades. So that is essentially what I'll be doing most of this week, and I'll try to, give you as much commentary as possible, like how I do with the weekend call, because most of the charts are broken down. I mean, like, we are in no man's zone. Like, there's nothing much that I can really talk about at the moment. So that is the reason why I'm coming up with that, with this kind of approach, where I'll give you more in detailed analysis with our live trading strategy that we'll employ this week. But other than that, I think there's one more announcement that we had this week, which is basically the journaling tool that we have introduced. This is something that Easy was working on for quite a bit. It's a great tool. This will also help me. Like someone was also telling me, like, let's have a five minute brief conversation, choose people randomly. I'll probably have to, like, most of the time when someone comes to me and asks me some questions regarding their trading or anything like that, and they say, Katie, I'm not doing quite well, what do you think I'm doing wrong, what am I doing right, or things like that. The first question that I ask everybody is, where's your log? Send me your log. Let me see your log, or and some people get really clever where they just send me like trade log statements from their brokerage account, which is awesome. But I'm not going to sit there and parse things out for you. Some people just don't even, like, they don't even journal their stuff, like, but journaling is very, 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 very important when you're trading. And if you can't put in that 10 to 15 minutes to journal and go through your journal, it is not good. But that is why we have this tool now. And you can give me access to view this tool, and like, I can look at this tool and say, hey dude, like, you are doing something wrong here. Like, like, I can go through that tool, go through your journal with you and give you some pointers as to nudging you in the right direction. So that is one of the main focus as to why we built this tool and why we want most of our users to use it. And I hope it will be helpful for everybody who uses it in the long run. But otherwise, let me quickly get into our economic calendar. And like, firstly, let's talk about our weekly seasonality. Weekly seasonality, like I talk to you about every week. This is a mere statistics as to what has happened in the past, and it is not a projection as to what will happen in the future. Any number under 40 and over 60 is something that I take a little bit more seriously. Looking at Monday, it seems like Dow and S&P are a little bit weak, and this is where I was saying, like, probably we will get a little bit more dip into the into the week, where we start off with a little dip, and then as the week progresses, we'll have a little bit more strength showing up in the market. But I usually do 1 week of data mining, but then I was also looking for seasonality for the rest of the month of March, because it's been so hectic trading. I mean, we've been doing great. I'm just saying, like, the volatility, and like, for new traders, they're absolutely getting obliterated, because like, the thing is, uh people just can't, they everybody makes money. I don't know how many times I have said this. um every trader makes money, like all these people that you see on X, on twintwit, whatever that you want to call it. um like, when they make money, they can make a lot of money, which is great, which is why options trading is called leverage trading, and that is how most people make money. The secret here is, when people are losing money, like, when the market is going down, when the market is not in favor, when there is volatility like this, when the market is in hard mode, these people, you go back and analyze, right? Like, you can do this yourself. You go back and see if the same people who are posting huge nice gains in December, January, February, are they doing it again? I will tell you, 9 out of 10 will not do it. Like, because most traders make money. I have seen this so many times with my very close friends too. They make so much money, but then they just cannot keep it. And that is where we have to be different. That is where a good trader comes in and says, I'm not probably not growing as quickly as I did in December or January, but then the account is still hitting all-time highs. Like I'll show you my account right now, and it will keep going, hitting all-time highs, right? Like I'm not going as quickly as I did in November or December or January, but I'm still growing, right? So I see that most of our snipers are also doing it. There are a few new members that are falling for these over trading kind of things, that when I say, hey, look, sit back, don't size down, don't size up, don't do this, don't do that, they just find trades from somewhere else. I don't know from where, but they find them and they just overtrade, and then they lose money. And they dig a deeper grave, like, when trying to go back green, and it just goes deeper and deeper, and it can't finally goes to zero. And when you don't have the capital, there's no way recovering from it. So but that's essentially where I also try to tell you, just be careful with what you're trying to do, because when you have to be in the defensive mode, you have to be in the defensive mode. There's nothing that you can do. But Monday seems to be a little bit weak. Tuesday seems like, again, we'll have a nice nasty bounce of given the volatility. It's just been like 100 points on SPX. So Tuesday seems pretty good. Wednesday, again, S&P strong. Nasdaq a little weaker, but Dow a little bit stronger. S&P stronger means IWM will be stronger. NYSE will have good breadth, I think, on Wednesday. Then on Thursday, you have everything getting very strong. Friday, you have Dow, which looks pretty strong, and S&P and Nasdaq a little iffy on how they look. But any number under 40 and over 60 is something that I take a little bit more seriously. Friday is a little iffy. So we'll have to see how the Friday price action goes. But when I did a data mining around, like, a couple of weeks out and going into the end of month being also the end of quarter, the end of March is quite bearish. The last 3 days is quite bearish. But when you look at, like, leading into that, it is quite bullish. So what I'm expecting here is probably a bounce to 6,000. 6,000 is a huge wall. It's a huge gamma wall. So it is a big resistance that you will see. Then from there, probably like 2 to 3 days of selling, that which induces a little bit more fear. People who chase at 6,000, or to stop them out, there'll be a $200 dip, 200 point dip on SPX, probably towards 5,800, and then from 5,800 it goes right back up, creating a higher low kind of scenario, and probably breaking and or gapping above that 6,000 level and using that as support, that rather than as resistance at going higher. So we'll have to figure it out. I still don't know if this is what will happen, but this is what I'm predicting will happen. I'm not going to trade based off my predictions, but if I'm seeing this price action, I will be sizing up and I'll be making more money because I'm prepared for this type of price action. So keep that in mind, and we'll play the market as and how it kind of evolves. Next one is the earnings calendar. First one is Oracle, is something that I'll be looking at for on the earnings, which comes out on Monday after close. Oracle, one of the biggest clients for Oracle is definitely TikTok. I, I think they will guide down. Although I am seeing a lot of put selling, like, I'm seeing a lot of 150 puts, 155 puts, 160 puts, 165 puts being sold on Oracle. And there's quite a bit of call activity too, for very longer dated, probably into December at above 190 position. So don't know what's going to happen there, but this is something that you want to look out for on the earnings, which will move a lot of cloud stocks. A proxy play that you can do for Oracle is definitely Snowflake. So keep an eye out for that. Next one is Adobe. Adobe, the chart looks pretty good and compressed. Hasn't had a good quarter for a while. They have been guiding down, doing all that. But if they beat and then do really well on their quarter, I do see a big squeeze kind of move on Adobe, and we'll see what to do there. But I don't see much flow there on Adobe. But this is another one that I'll be looking out for to play to the on the chart. I'll go over the chart of Adobe as well, and we'll see what to do there. Last but not the least, I'll also look for Ulta. Ulta Beauty has always gone up, just like how CMG does, just like how other what's the other one, BKNG does after earnings. They always go up for some goddamn reason. But keep an eye out for that Ulta Beauty. The biggest problem for Ulta is um, they will they have a big hit. The beauty industry in USA has a big hit because of the TikTok ban. Obviously TikTok is not banned anymore. Trump is not talking about its ban anymore. But that is something that you want to look out for. I actually want to talk about flow trade also, that I was seeing on Futu. This is a Chinese name, and there was a big call flow. I will post out the call flow as well. I think Fluid is in it. I'm not sure. I think Fluid is who is in it, and that's how I was interested in looking at it. But there's a big call flow there, and the volume also is sticking to the OI. So keep an eye out for that on Futu. A call flow. So we'll see where it kind of opens tomorrow. We'll probably play the run up to its earnings, and then like we'll see if we can like play its like if we get some good amount of profit, probably leave some runners into its earnings as well, to play the upside on Futu. So these are about four stocks that I'll be looking out for on the earnings calendar front. All right. Next one is the economic calendar. This is a big one this week, that everybody has to have eyes on. The first one is the CPI, and the next one is PPI. The one thing that I want to talk to you about is, and tell you this is, market has not been moving as much on CPI as it has been moving for PPI recently, and if CPI even comes in hot, that is something that you want to keep an eye out for, because PPI is what is actually causing the move to the upside. CPI again comes out Wednesday pre-market, PPI comes out Thursday pre-market. So any swings that you're taking, just be aware that they will be inflated, and just be aware that they can go to zero if the direction is not in your favor, or if there's a flat action for those, on the price action, because of the deflation in premiums, you will be stuck with a position that is down, um, and like, just be careful about that, and don't swing big positions into weekly options on for these two macro events there. So keep an eye out for that. All right. Next one I want to talk about. I just don't have any top three trade ideas I can say. I just have Google here because I'll show you something that this is a very unusual way that I kind of play something, but this is a very this generally helps me in shorter term analysis, like where I talk to you about relative strength and relative weakness, right? So I will talk about relative strength in Google that I'm seeing and why I think Google is a good play. So let's say Google dips on Monday. I think it'll be a good buy the dip opportunity because it will create a bullish divergence against the index. Meaning, look at how SPY is, right? Like where you see how SPY is. So SPY is basically breaking down. It has made a new low on Friday. It has made a new low on Thursday. It has made new lows every single day of the week, right? So when you think about that, and when you go back to Google, look at what it did on. So it did a low with the market, and then it bounced. It did not do a new low, did not do a new low, did not do a new low, and it has been looking relatively strong, right? When SPY is making new lows, Google is not. So what does that mean? It means relative strength, right? So that is the reason why I'm saying this can be the trade idea for the week. If the market goes up, Google is your play to play 175 calls or 177.50 calls, either or. You can like I am thinking if the market bounces like how I think it might, um 182 to 186 is the possible target on GOOGL, right? So that is the relative strength concept that I came up with. I don't play this quite often on the daily time frame, but I the principle still holds good on the daily time frame. I just don't play it as much, but I just wanted to let you know. I play it on the lower time frames where I keep telling you, this stock has relative strength, and this thing is happening here, this thing is happening there, based on the index. But Google is the trade idea for the week. I'll be looking out for 175 calls for the weekly expiry. If we have a major dip towards 170 on Google this earlier in the week, coming Monday or Tuesday, if we break out and break above 174, I'll be looking out for 177.50 or 180 calls on Google, and we'll play that accordingly as to how the price action looks like for Google. So that's the top trade idea for this week that I have on Google, and that's the reasoning that I have for why I picked Google also. So keep an eye out for that on Google. Next, let's talk about SPY, QQQ, and IWM, and then I'll talk about a few stocks that I'm looking and I'm eyeing for to play on some breaks. So this is a 65-minute chart on SPY. Obviously, you would probably think, oh, you know what, you're just drawing a trend line here. Yes, this is a very short-term trend line. I'm not going to look at this trend line for more than a couple of hours, couple of candles next tomorrow. And if the first two candles are not able to hold this point, I think there's a chance that we dip down to 572 and before we head back higher. This can again, like, this can create that inverted head and shoulders kind of move, 572 and then the inverted head and shoulders. But then I wouldn't be considering this inverted head and shoulders until and unless that 585 is broken. That 585 break will give you 20-point rip to the upside. So 585 break will go all the way up to 602 to 605 on SPY. So this is something that I believe will happen this week, where, like, we probably will have a little bit of a pop. Like, if we drop off, it's totally fine. Like, we'll probably go down to 572 to 570. We'll keep an eye out for those levels. But any pop towards this filling this island, like filling this bear gap fill will act as resistance. Like, if the price, if you start to see like candles like that, right? Like, if you see candles like that, and then there's this fill of this candle here, once we hit somewhere up here, we'll probably see a dip on the chart, right? That is one thing that I'm seeing. Given the macro calendar and where we are seeing CPI and PPI, if we see a gap up, if we see a huge gap up, that is where things will get a little bit more interesting, with an island, uh, with an island bottom forming, and we'll see a pretty substantial move at that point, going to end of March, and then April gets a little bit more bullish, and we can play a lot of stocks to the upside. Like, there's a lot of beaten down stocks that we can easily make 20-25% just buying them and selling some covered calls. And I'll walk you through those, which is a way that I have traded quite a bit as well. But we'll also do options trading. I'm not saying we won't, but I'm just saying, like, there in your long term portfolios, you can definitely do something like that, and make some quick buck in about 4 to 6 months. I'm saying long term portfolios because these portfolios are usually big, and like, you can sell covered calls, and selling shares at those covered call levels is pretty good. So that is why I'm kind of going there with that. So keep an eye out for these two levels here. Keep an eye out for this bear gap fill. This bear gap fill intraday will act as resistance. Any dip towards 572 must hold, or we go back down to filling this um bull gap here towards 563 to 560 level here. And after that, we'll have to reassess the bounce. And if we are still in that lower high kind of scenario, we'll have to figure out where that lower high is. And again, hecticness continues. We should size down our positions until that happens. And like, it's fine to not make as much money, but like, just stay green or stay flat. Don't run your accounts to zero. That's essentially what I'm trying to tell you. So keep an eye out for those levels here on SPY. Next one is QQQ. Very dirty chart here. Very, very dirty chart. Actually, let me remove all these island bottoms and all these, yeah, all these gaps that were there. So very, very dirty chart. It has broken down, but this area here is a heavy consolidation area, and I believe it should hold that 480 zone. If that 480 zone is broken down, we go all the way to 460 here on QQQ. So keep an eye out for that 480 zone here on QQQ. Anything to the upside, you would probably need 498, and then 500, obviously, which is being the psych level. You need 498 being recaptured here on QQQ. Any dip towards this week, I think 485 to 480, 480 to 485 is where you'll see that lower high kind of thing in the lower time frames. When I say lower time frames, I'm saying 65-minute chart or 15-minute, 5-minute, or something like that. And if we see that, is when we'll try to figure out what to play, and what to play is obviously Google. So that is something that you want to keep an eye out for, and we'll play the market as and how it kind of evolves on a day-to-day kind of scenario. But I do believe there will be a dip, uh, probably Monday or Tuesday, and then we'll see a little bit of improvement into CPI and PPI on the market. So keep an eye out for that on QQQ. Next one is IWM, extremely bad looking chart. Where is IWM? There you go. All right, IWM, you need this trend line. Until that trend line is broken, there's nothing to be bullish about on IWM. We are hitting those levels which are very important to hold for the bulls. Very interesting 202 being held. If 202 breaks, it's 198. I don't see 198 being broken on IWM. So just something that you want to look out for on IWM here. And IWM can have a bigger move than QQQ and SPY into CPI and PPI after CPI and PPI as well. So that is something that I can tell you also on IWM. All right. Talking about some of the charts that I'm looking for. The first one is Adobe that I was talking about. A nice little consolidation that's happening here. You see this consolidation, and once we see like a little bit of a pop over this upper trend line kind of thing, like like you see a little bit of a pop over that upper trend line. Um, I probably will be a little bit more bullish um, on the move. I'm just trying to figure out if there is a nice little trend line here as well. Yeah, you can probably that's a good looking chart as well. Is this a bear pennant? Probably is. But it's again holding when market has been making new lows. Adobe has been holding pretty well. Obviously, it's down from its all-time highs of 700, I think, right? Like, yeah, somewhere close to 700 because of this whole chat GPT nonsense that has been going. But I don't think Adobe has that much of an effect as people have been bearish about. We'll see that in this quarter, and if they do really well, I see Adobe going back to around 550-ish on the like into mid this year or something like that. So keep an eye out for that on Adobe. Um, Next one is what was the other one that I was looking at? Let me see. TSM. Where's TSM? TSM. Yeah, there you go. TSM. This upper trend line. Again, I don't have any confirmations. I'm not telling you to go by calls. I'm just showing you some trend lines which I'm really looking forward to see what we can play. There's no chart out there that looks really good at the moment. You can probably pick up some shares and do really well in a midterm kind of sense, but in the short term for options, you have to be dynamic to reassess the charts every single day, and that's essentially what I'm doing every day. And look at this upper trend line here. If this upper trend line, when the day this upper trend line we see a peekaboo kind of setup, I'll probably play some 200 calls about 2 to 3 weeks out, and can make some good money here on TSM. So keep an eye out for that. Next one is Uber. Uber has been showing some relative strength as well in the market, with the market going down as much as it did. Look at how Uber kind of held its overall positioning, right? Obviously this inverted head and shoulders, like this is the inverted head and shoulders that I'm referring to. This inverted head and shoulders broke out with the measured move is around 74 to yeah, about 20 points, I think. Yeah, 20 points. So 69, actually, yeah, close to 20 points. I mean, less than 20 points, but then I'm just giving you a rough ballpark, and it did its measured move. Um, and now it's back down, but then it's holding this 74 position, 74 level. Like, I do think 80 will come here on Uber pretty fast. 80 calls for a couple of weeks out, if it's showing strength, is a good way to play it. If 74 is broken, 70 puts is something that you can look out for on Uber as well. So there's two ways to play it. Keep an eye out for that on Uber. 74 level to play puts. If 74 level is being held on the daily, you can probably, and market is bouncing, you can probably play some 80 calls to the upside here on Uber. I'm thinking the dip will be bought out on Uber towards 74, but obviously as things progress, I'll have this on watch and we'll see what will happen there on Uber. Next one is XOM. I'm looking out for this 112 level to break to for XOM to move towards 115. I think 115 will come up in XOM in the next couple of weeks. So keep an eye out for this one. 110 calls is something that you can look out for on the dip towards 108. A couple of weeks out would be a better option here for XOM because it's a much slower mover than the rest. But this is one stock that I'll be looking out for as well to play to the upside. There's quite a bit of call flow that I've seen. I know Fluid is in one, or she bought and sold it. I did not play it, I believe, last week, but that's something that I'm looking out for as well. Um, and I'm just trying to figure out if there is anything else that I have seen. Oh, one of our members was talking about KO. They're pretty good. I did not do the analysis on this, but they were talking about how this would be a cup and handle position and a nice little breakout that is brewing. I think 72 call is something that you can look out for on KO. If the market is weak, defensive stocks, especially companies like KO, will go up. 72 call is something that you can look out for. This is a clean break on 72. 172 breaks, it's just going to 70, yeah, 74. So, yeah, 72 call for a couple of weeks out can be a good play here on KO. So keep an eye out for that on KO as well. Next one, I don't have levels on this, but I'm just trying to figure out what else do I have. What else can I, like what I mean, on the top of my head, what else was I was looking at? Um, yeah, I think that's mostly what I have. Not Nvidia. Let me see if now also does not have a setup. Yeah, I mean, I just don't have any setups, to be honest. Like obviously, Amazon is another one which I'm looking out for this upper trend line as well. Like there's so much patience and waiting to do on the charts. Most charts look ugly. They just look bad, and there's nothing much I can do here. But just have patience, and we will. I mean, it's an evolving market on a day-to-day basis, hour-to-hour basis, and you have to be on your toes. So if you can't scale back, look for alternatives to, like, say, okay, you know what, market. I'm not saying the market will remain like this. It'll turn to the best market ever in a day, and you are back in taking swings, and like you're like it's like a nice breeze trading it. You just have to be in the game, and when you want to be in the game, you just want your opponents to get tired, which are basically market manipulators. Let them get tired, let them do what they have to do. Let their stomachs get filled up, and then they'll also splurge some of the cash towards us, and that's when we open our wallets and try to make some good money. But otherwise, if you have any other questions, do let me know. But lots of improvements that are coming up on our card, and like in a very short term basis, I think there's a lot of improvements that will come up as well, where we want to, like, indulge and involve with people and things like that as well. But anyway, having said that, if you are in Philadelphia area, I'm happy to, like, sit around, trade with you, figure out your trade setups, and like talk to you regarding market psychology or anything like that. But if you do have any other questions, do let me know in chat. I'll definitely get back to you, and we'll talk more. And hope you all are having an amazing weekend. And thanks a lot.